Hello, listeners. Markets have recently shown some weakness, correcting from around 24,700 levels, and it is currently trading at around 23,900 levels. Yesterday, the Fed came out with its monetary policy meeting, the last in this year, and as expected, there was a 25 basis point rate cut. What surprised markets was mostly a hawkish tone going forward, with both the inflation and GDP still looking out of the comfort zone of the Fed. The Fed categorically told that they would be more inclined for a 50 basis point rate cut only in 2025. So that has sent some jitters to markets, with the US bond yields, the dollar index moving upwards. This is actually on paper not good news for the emerging markets as well as for commodity driven stocks. But when I look at the domestic front, I feel with the new RBI governor coming in, the agenda would be more towards growth rather than the inflation. So I believe that with most of the negatives on the domestic front are already priced in, and from here on we would see mostly the incremental positive news coming in. So my bias from a medium to long term perspective still remains positive. At the current juncture, I particularly like the large cap banking space, be it private or public. In the private space, I typically feel ICICI Bank looks much better, and SBI on the public sector front. With the recent CRR cut, I feel the liquidity would improve in markets, and that should revive the credit growth going forward. One more sector which comes to mind is the cement sector, as my sense is that with the recent price hikes and with the volumes picking up post monsoon, the numbers in the third and fourth quarter should show an improvement. So in the cement space, the top picks at this point in time would be Ambuja Cements. Overall, I feel that from a weekly perspective, 23,800 should broadly be protected, and we should again trade in a range of 23,800 on the downside and 24,700 on the upside. That's all from my side, listeners. Thank you.